Hello students, today I am going to discuss non-scheduled banks. Here non-scheduled banks also functions in the Indian banking space in the form of local area banks. Local area banks are the banks that are set up under the schemes announced by the Government of India in 1996 for the establishment of a new private banks of a local nature with jurisdiction over a maximum of 3 contiguous districts. Local area banks aid in the mobilization of funds in local area and semi-urban districts. So that local area banks is equal to non-scheduled banks. You have to remember the thing. Now the next point is payment banks. On 19 August 2015, the Reserve Bank of India gave in principle license to 11 entities to launch payment banks. Here the entities: Aditya Birla, Airtel M-Commerce, Cholamandalam Distribution, the Department of Post. The Department of Post is very important. You have to remember that thing. This is under that payment banks. Next one is FinoPay, National Securities Depository, Reliance Industries, Dilip Shanghvi, Sun Pharmaceuticals, that Vijay Shekhar Sharma, Paytm, very important. This is under payment bank, that Paytm, that Tech Mahindra, Vodafone, M-Pesa. The in principle license is valid for 18 months, within which the entities must fulfill the requirement. They are not allowed to engage in banking activities within that period. They are not allowed to engage in banking activities within that period. The RBI will consider grant full license under Section 22 of the Banking Regulation Act 1949. Small finance bank. The small finance banks are the types of niche banks in India. Bank with a small finance bank license can provide basic banking service of acceptance of deposits and lending. The aim behind this to provide license financial inclusion sections of the economy not being served by the other banks, such as small business units, small and marginal farmers, micro and small industries, and unorganized sectors entities. On September 16, 2015, the Reserve Bank of India has decided to grant in principle approval to the 10 applicants to set up finance banks under guidance of licensing as small finance banks in the private sector. That banks are AU Finances Limited, Capital Local Area Banks, Disha Microfin Equity Holdings, ESAF Microfinance, Janalakshmi Financial Services, RGV and Northeast Finance Services. That RGV and Northeast Finance Services is the very important because that banks located in Guwahati. That Suryodaya Microfinance Private Limited, Navi Mumbai is under the Mumbai. You have to remember that Guwahati, situated in Guwahati, RGV and Northeast Finance Banks. Next is Ujjivan Finance Bank, that is situated in Tripura, Ujjivan. Next one is Utkarsh Microfinance Bank. So, in principle approval granted will be valid for 18 months to eligible the applicants to comply with the requirement under the guidelines of the full field conditions may be stipulated by RBI. On being satisfied that the applicants have complied with the requisite conditions laid down by it as a part of principle. But the main important point here, small finance banks are the niche banks with a small finance license and provide banking services, acceptance, the deposit of lending. What is the aim? The aim is providing financial inclusion. Here financial inclusion means providing that actually the main aim of main objective is to serve the basic banking services to the unreserved people in the country. This process is for achieving economic growth in the country. So basically that financial inclusion is for economic growth of the country. Okay, So basically this is where economic growth for the country. Next point is unorganized sector. Here banking needs for the financially excluded population is scattered to by the other organized sectors, other unorganized entities, distinct from banks such as moneylenders, pawnbrokers, indigenous bankers. The economy on one hand performs through organized sectors and on the other hand in for rural areas. In rural areas there is a continuance of unorganized, informal and indigenous sector. The unorganized money market mostly finances short-term financial needs. So this line, this short-term financial needs is very important for unorganized sector. The main constituents of unorganized market is indigenous bankers, that is IVs. Indigenous bankers are individuals or private firms who receive deposits and give loans and thereby operate as banks. Very important for your exam point of view. Indigenous bankers are individual or private firms who receive deposits and give loans and thereby operate as banks. IVs accept deposit as well land money as well as land money. IB accept deposit as well as land money. Here land means, land is equal to what? That land means give loan to public. Okay. Next, the further their lending operations are completely unsupervised and unregulated over the years. This is unsupervised and unregulated. Further their lending operations. Okay. Over the years, the significance of IBs has declined due to growing organized banking sector. That IBs significance is declined. Next one is money lenders. They are those whose primary business is money lending. Money lending in India is very popular both in urban and rural areas. Interest rates are generally high. That for that money lenders, because that money lenders is basically is an unorganized sector. Here organized sector, if you in a layman language, that organized sector means for example bank are the organized sectors, but the money lenders is those person who are not act as a banking services, who are not under RBI. They directly pay money in oblique that in his oblique her guarantee. So that person is not organized, or that person is not under Reserve Bank of India or any statutory body. So this type of money is very risky for any kinds of business. This money lenders interest rate is very high. If you look at that line, they are those whose primary business is money lending. Money lending is in India is very popular both in urban and rural areas. Interest rates are generally high. Large amount of loans are given for unproductive purpose. The operation of money lenders are prompt, informal and flexible. The borrowers are mostly poor farmers. Basically the poor persons are not go in banking because they are not satisfied, or they are not know the new culture of banking. So they goes to to money lenders, and that's why that money lenders give him oblique her some money as a high interest rates. Because of this, the poor farmers and artisans, petty traders, manual workers are goes to that borrowers, to the borrowers. Actually, they borrows that money from the money lenders. Over the year, the role of the money lenders has declined due to growing importance of organized banking sector. In both case, indigenous bankers and money lenders. In both case, the scenario in today's point of view is change. In our next class, we have to discuss non-banking financial companies. Okay.